Next. The characteristic shared by all liabilities is that they what? What does a liability have? All liabilities have this. Okay, we're all over the place on this one. Okay, so all liabilities are an obligation to provide something. Now, I'm going to assume that on this one, some of it was just being able to read the question, okay? I mean, the answers, sorry. So they don't result in an inflow of resources, all right? That was some of the answers. Okay, obligation, liability is something we owe, so it's not an inflow. Always end in the word payable. What's the one that doesn't end in the word payable?
Deferred revenue.
Deferred revenue or unearned revenue. I can see where that, though, on a quiz like this going fast, that would be one that you'd answer. So I can see that one. So I can see the orange, but it is green, obligation to pay something in the future. All right. Ooh, had to change. All right. Charlie owes $800,000 to Tilly. Which account is used to record the amount owed? Which account is used to record the amount owed? It's $800,000.
Oh.
You can change it, I think. Oh, you can't? Oh, okay. Two more answers. Think about it. Owed. All right, notes payable. All right, look at that. Look at that. It's a speed. All right, so why do we think it's notes payable instead of accounts payable?
Because the amount is really big.
Well, it is the amount's really big, but the key was he didn't buy anything or use anything like electricity. He owes $800,000. So if you borrow $800,000, it's going to be a note. Yeah. So that got almost everybody. So my guess is when we see the leader here, it might have a switch too. Oh, we didn't because everybody had. Okay. If an expense has been incurred but will be paid later, then what? Expense incurred, it happened now, but we're going to pay for it later. Two of those can be crossed off right away. I think the music is stressful.
Yeah, it
Okay.
is.
I don't know how to turn that off.
I'll pick a random answer. Oh, pick the right one.
All right. That was good. All right. And the reason, let me see if I can get rid of the volume now. Okay. The reason it's a liability because if we incur it now, it's going to be like supplies expense, but we're going to pay for it later, supplies payable, right? Nothing is recorded. If it's incurred now, something has to happen. We know it's an asset, you can throw that one right out, right? An expense is never an asset. And then it says a revenue and an expense has been incurred. Have we ever done a journal entry where there's a revenue and an expense at the same time? No. Okay. So those two should have been thrown out. So glad to see we got that one. All right, Emma. Which of the following would not represent a financing activity? See the change, you don't know when it's going to go away. Which is not a financing activity? So statement of cash flows, which is not a financing activity. Is it better without the music?
No, it's so stressed.
It's still stressed. Want me to sing Jeopardy for you? Do, 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 do.
Yeah.
You got it. What would you say? You're laughing at yourself. See, I like that you guys know, but then nobody else is worried about, other people don't know if you're wrong. All right. So financing is when you do something, a statement of cash flows is things that you use to operate outside, right, not operating your company. So operating activities are day-to-day, investing are like property, plant, and equipment, and financing are things like loans, stock, and dividends. So the first is dividends, the blue is investment by owners, so stock, and the yellow is borrowing money from the bank. Those are all financing activities. Buying supplies is an operating activity. So my advice on this, for the statement of cash flows part of the test, the only thing you really need to know is what is IA, OA, IA, and FA. What are those? What goes into each one of those? All right. All right. Which of the following will have no effect on total assets? No effect on total assets. Which one of those, if you did it, would have no effect on total assets? Man, someone's fast with some answers. All right, so let's look and see. If we did the journal entry, so this could be a multiple choice question, and it would be considered a hard one, just so you guys know. Bill the customer for work performed during the month. If we billed them, we would debit what account? Accounts receivable and debit revenue, so it would increase assets. If we received cash to pay for a previously recorded accounts receivable, we would debit cash and credit accounts receivable, therefore there would be no effect on total assets. The bottom one, received cash for work performed next month, it would be debit cash, credit unearned revenue, total assets would go up. Received cash for work performed that day, debit cash, credit revenue. So all the other three all affect cash all affect assets because cash would have gone up. This or accounts receivable, that one it netted out. So the way to figure that question out is to do the journal entries. Now you didn't have time to do that, you had to read it really fast.
Yeah.
But that's how you'd figure that one out. All right. Deferred revenue is and what? What is it? Deferred revenue is so we jumped backwards. This is chapter 1 or 2. So we got a little easier. That last one was a hard one. One more answer. All right. Liability. All right. Deferred revenue is not an asset. All right. Deferred revenue is a liability. It's always a liability. All right. Deferred revenue is unearned revenue. Same thing. All right. Something that we owe. And it's not revenue. If it's revenue, it's just called revenue. If certain assets are partially used up during accounting period, then what? If we use up part of an asset, just part of it. This is an adjusting entry. So we use up part of an asset. What does the adjusting entry do? Two of those can be completely taken out. What happens to the asset if it's partially used up? Okay. Now that one went faster because, again, that's hard because there's so much wording in there. But I knew we'd at least be able to discuss it when it came up. An asset count is decreased. It says an asset partially used up during the accounting period, then what? If it's used up, we have to decrease the asset. All right? And then an expense is recorded. All right. Nothing is recorded until completely used. Not true. All right. Or nothing is done until it's replaced. Not true. So that's what I meant by taking out two of them right away. And a liability account is decreased and an expense is recorded. Nothing to do with a liability. An increase in revenue always what? An increase in revenue always think about where it goes. What will it always do? All right, what happened to my 14th person? Last couple questions, 14 has not been answering. All right, so It always increases stockholders' equity. All right, where is revenue? Revenue is right here. Revenue increases retained earnings. Retained earnings increases stockholders' equity. Is revenue under assets? No. All right. And it's not going to decrease stockholders' equity because revenue is a good thing, right? So it's always going to increase.
It feels like when you earn revenue, you increase the cash or accounts receivable. So that's what in mind that, okay, it increases assets.
Right. But that's not revenue, that's cash. Cash increases assets. Accounts receivable increase assets. Revenue goes under stockholders' equity. It increases stockholders' equity. Cash increases assets. Yes, when we get revenue, it's either going to be accounts receivable or cash, but those are the two accounts increasing assets. Revenue always increases stockholders' equity. Expenses are reported on the what? First, remember what statement do they go on? Did you hit it too quick? Someone's being competitive and hit it too quick, so make sure you read it.
I hope you get wrong.
Well, I know which one he guessed, so I know I'm going to have at least one of that color.
But who is Emma?
I don't,
She's
Emma.
Who is
In the back and never talks, and she's getting all of them right.
Well, okay, she's not talking, is she? She's listening.
Asking questions was the correct term.
Oh, I see.
Yeah. All right. Well, I know who did red because he was just trying to get those points for guessing quick. All right. Balance sheet, the time in which we incurred. You got the incurred part, but expenses always go on the income statement. That was a click failure? Okay. All right. Emma's rocking.
Okay, Emma.
Lucas is trying.
Lucas, he lost his place. We don't get
Which
it.
account would be increased with a debit? Okay, people. No click failures. Come on. Increased with a debit. Which account would be increased with a debit? Maybe. Come on.
I didn't see if there was any expenses or dividends.
Yeah, you did. That's a good check. She made sure there wasn't any expenses or dividends thrown in there. So she did good checking for that. I'm looking to see where my 14 went. All right. I don't know if people are messing with me or if we're just getting that wrong. What does accounts payable increase by?
Supplies.
What? Wait, what was
Account.
the question?
Oh, so which account would increase with a debit? Supplies is correct, but we have some answers in the other ones. That's why I'm talking about it.
Okay.
Accounts payable increases with a credit. Common stock increases with a credit. And then retained earnings with a credit. Remember the line that goes down through here, right? This line, everything on this side, 95% of it is a credit. Everything on this side, 95% is a debit. So far, we've only talked about two things that increase with the debit on this side, and that's expenses and dividends. All right. Adjustments help ensure that all blank are recorded in the period in which they are earned. I know, you should get this right. Which are earned. That's a key word too. The period in which they are earned.
Oh. Oh.
Oh,
I
that's the
got it.
answer.
I didn't do anything from the question.
It's like,
Oh,
oh.
wait,
Well,
I
I was
got it
correct.
right.
What?
I thought.
I got point
Yeah.
zero. Yeah, I got point zero too.
Did you wait too long?
No.
No.
I got 0 points.
Did I mark it wrong?
I got it right. It just
Oh,
got plus
it just
zero.
didn't get any points?
Mhm.
Oh,
Lame.
I wonder if I didn't put points on that one for some reason.
You just wanted all this.
Okay. All right, so revenues. All right, so that was good. We got that one. And that was a homework question on the quiz, right? Yeah. That was just by accident. I didn't know that. I just liked the question. Now, if I would have changed that, recorded in the period in which they are incurred, it would be expenses. Yes. All right, so the point stayed the same. A business purchased supplies for cash. The business will decrease its cash account and supplies for cash. It will decrease and it will also do what? Just a regular old journal entry. It's going to decrease cash, so it's going to have to increase something else. I'm helping you. Increase something else. All right, so we're going to increase supplies, not supplies payable, because supplies payable, we're paying cash, so there is no supplies payable. And then decrease stockholders' equity by supplies expense. We didn't use it yet. We're going to do supplies expense when we use it. All right. A couple more. Which of the following expressions of the accounting equation is correct? Look at them carefully. I played with it a little bit. I did this on purpose.
I don't think it's any of them right.
Yes, one of them's right. I didn't do that to you.
Oh, I see. Yeah, it's funky.
It's not funky. I just moved it around a little bit.
Orange.
All right, all I did was I moved liabilities over here. So instead of assets equal liabilities for stockholders' equity, it's assets minus liabilities equals stockholders' equity. Why? Because if you're not given one of those, could you plug to get it? Yes. And that will, I'm telling you right now, you're probably going to see a multiple choice question on the second test, where you might have to do that. On the second test, not this test. You don't agree? Assets minus liabilities equals stockholders' equity?
Assets equals liability.
If you're doing a math equation,
Yeah, I
this
can
right
see that
here,
you could even it out.
if you move it over, assets minus liabilities equals stockholders' equity. If you're solving, if you have assets and you have liabilities, can you figure out stockholders' equity? Yeah. Okay.
Yeah, exactly.
Mm-hmm. Okay.
Now I'm in 4.
But orange can't be right because assets equal liabilities plus stockholders' equity, not minus stockholders' equity. Oh, Kalanda moved up. Look at that. You're three.
Where he came
You got a little fire next to you. You got 3 in a row going there. The accrual adjustment recorded to adjust for expenses incurred but not paid. Expenses incurred but not paid. What's going to happen? Think of the journal entry. You incur an expense, but you didn't pay it. So it's going to be an expense and a what? You didn't pay it. Something expense and blank. Not cash. All right, so you incurred supplies expense, but you didn't pay it, supplies payable. So a liability is going to increase. All right. And the asset wouldn't increase because it was an expense. If we would have bought supplies and not used it, it would have been supplies and supplies payable, but we actually incurred the expense. All right, assets. All right, so it's going to be a blank. Assets blank. What? What are assets? All right, pretty good. I think sometimes red gets picked because it's the first button. But we represent things that are controlled or owned by the company. All right, something that is owned by the company. They're not earned. What is earned by the company is called a revenue. Yep. Oh, now Emma's on it. 12 in a row. She's on a streak back there. All right, what is the minimum number of accounts that must be involved in any transaction? Minimum number. Look at that, answer's going crazy. Come on, I want all 14. What's the minimum number? How many must be involved in every transaction? You must have...
Trick question.
It's not a trick question. Almost. 2. You got to have 2. You can't have 1 in a transaction, so there is a minimum. Huh?
I picked 2.
Okay. All right, I think there's 2 left. A sole proprietorship is... All right. What is a sole proprietorship?
I hope we all get 14. 14 correct answers.
14 correct. 13's our high. That last one was our high, I think.
It's a diamond.
Got 2 more. 1 more. What is a sole proprietorship? All right, we got it. 14. Last question. The adjusting entry to record amounts earned that previously have been collected in advance will do what? Amounts. So we're collecting the amount that had previously been earned. So it's already been earned, we're collecting it. It's an adjusting to record the amount earned that previously had been collected. So we're earning it now, it had previously been collected. We're earning it. What's the adjusting entry?
Pick an answer.
All right, well, the majority of you got it right. We already collected the money, the cash, but we didn't earn it, unearned revenue. Now we're earning it. Debit unearned revenue, credit revenue. I'm taking you didn't get that one?
I didn't even know.
Oh, I was confused.
Mine was very short.
Okay, now these are short, but the purpose of this was, we used to do Jeopardy, and I put you guys in teams, and we played Jeopardy. But then you had to kind of raise your hand and then guess the answer as a team. Here, it made everybody participate. In Jeopardy, if you had one dominant person, then the other people were kind of quiet and maybe didn't guess. Here, everybody gets to guess. And if you're wrong, it's okay, because notice it only showed the top 5, so it didn't matter who was at the bottom. You know what you missed, right? So if you were missing questions that you think were chapters 1 and 2, dealing with debits or credits or assets, you know you need to go back to chapters 1 and 2. If you were missing these harder questions, these were harder questions, okay? And you were timed. That makes it hard too. If you were missing these questions, then it's chapters 3, mainly 4, and you haven't done the homework for chapter 4. All right? I will tell you this. A lot of people, let me rephrase. Usually, there's 1 or 2 people that don't do the homework for chapter 4 before the test. To me, I just don't get that. Number 1, you're missing 10 points. And number 2, that's studying. When you do chapter 4 homework, you're studying for the test. The hardest part on the test is chapter 4. So if you don't do the homework, you're kind of messing yourself up. All right? So, if you think you need help, come see